We're getting some interesting developments on the whole Disney Hulu deal with Comcast, and right now it strikes me as kind of desperate on Disney's part. But let's jump into this article from the New York Times to try to see a little bit more about what they're doing. So, right now, according to this headline, Comcast and Disney agree to speed up Hulu deal. Disney is poised to own the entirety of Hulu streaming service, which has more than 48 million total subscribers. It'll probably be about 10 million once Disney gets through with it, but that's just pure speculation on my part right now. But yeah, jumping down into this article, Mr. Roberts, and that's Brian Roberts, who's the CEO of Comcast, said Comcast and Disney had agreed to conclude their negotiations over how much Hulu was worth at some point after September 30th, when a formal appraisal process of Hulu's valuation would begin. The process has been expected to conclude at some point after January. I will take a little. It will take a little time for this to play out, but both companies wanted to get it behind us, Mr. Roberts said. So we pulled the date forward. The question is, a couple paragraphs down. The question is now how much the company is worth. Previously, the two sides had agreed that Disney could require Comcast to sell it 33% stake in Hulu at a price that values the entire company at no lower than $27.5 billion. Comcast could also force Disney to buy its stake at that price. So by Disney buying a third of Hulu from Comcast, and the company is valued at $27.5 billion, that means that Disney would need to fork over around $9.2 billion to Comcast for this. Now, some people are wondering, do they actually have the ability to do that? Well, according to Disney, yes, they do. I mean, this article from Deadline, dated August 9th, so just about a month ago, Disney very comfortable with current liquidity position as Deadline nears to buy rest of Hulu. So Disney interim chief financial officer Kevin Lansbury said the company is very comfortable with our current liquidity position at the time approaches for it to buy Comcast's 1/3 stake in Hulu. The floor for the put by Comcast is about $9.2 billion. Lansbury noted on a conference call after Disney's earning in response to questions about the company's ability to fund the transaction. Comcast CEO Brian Roberts has called the streaming service very valuable. So okay, $27.5 billion. Yeah, we went over that already. Lansbury said Disney has about $11.5 billion of cash on our balance sheets. We've got $10.5 billion worth of revolving credit facilities and commercial paper, and we'll have plenty of future cash flow to help fund all of this going forward. So yeah, according to Disney, they have the money to do this, but keep in mind, this was also in response to questions about their earnings call. So Disney is basically going to try to paint themselves in the best light. I mean, could they just outright lie? Then I don't think they would just outright lie, but I mean, these aren't like necessarily like official statements or tax records or anything like that with the company. I mean, this is just what the CFO has been saying. Like, yeah, we have the money. We have $11.5 billion on our balance sheets and stuff like that. So you got to take this with a grain of salt, whether they actually have the money to do this. And me personally, I think, could they do this? Yeah, sure. But I mean, you also got statements from Bob Iger in the past talking about selling off some of their television networks like ABC and FX and looking for partnerships for ESPN, which a lot of people were speculating at the time that this was trying to garner some or get some money in order to pay off not only debts from the company, from like their Fox acquisition and stuff like that, but also to try to pay off that Comcast deal that they've already inked with them over Hulu, which doesn't make sense if you're going to be selling off your television networks in order to buy a streaming service when you say you have enough money to already buy that streaming service. Not to mention a lot of those debts that they were looking to pay off was also from the acquisition of Fox, and part of that was FX. So it's like they bought Fox and then they were trying to sell off pieces of that in order to fund that purchase, which it strikes me as buyer's remorse at best, or it's just like, okay, they bit off more they can chew at worse. I mean, I don't know. I'm just going to put a caveat that I'm not a financial expert or whatever. I mean, I'm basically just someone who looks at this from the outside. I try to pay attention to what's been going on, but I don't necessarily have a huge, I don't have a complete understanding of all the inner workings of the business side of it. So you can take with what I say a grain of salt. I'm basically just reporting on what I'm seeing and giving my opinions on what it looks like. And right now, what it looks like is things are going bad for Disney, and they're trying to drum up some publicity over it because, as you can see, the stock price right now, it's pretty low. I mean, this is around a 9-year low for the company. I mean, including after COVID when everything was shut down. I'm talking Disney didn't have the movie theaters, they didn't have their cruise line, they didn't have their parks, and yet they're worse off now than they were then. And Bob Iger, one thing I learned from him as CEO is he just likes to buy up other stuff. I mean, he doesn't know how to innovate. He just knows how to take other people's things and slap the Disney label on it. And I think that's kind of what they're doing now because they're having issues with the stock value. So what they're trying to do is like, okay, let's move up this deal that we knew that had to happen. So we can make it seem like, yeah, we're so good, we can just pay for it right now. And there's progress and moves being made with the company. So maybe it will try to garner up some stock value to them, or investors will come back to the company or whatnot. I mean, will that actually work? It'll probably work a little bit, but for all intents and purposes, I mean, this is probably a short-term solution for the company. I mean, it's like, yeah, you announce something, try to get some publicity, and then you can go back on it later on, but hoping that it would actually boost your stock value in the interim. And this seems like be what they're doing, just basically a Hail Mary to try to regain some value in the company. But like I said, this is kind of a short-term solution because you can't keep doing this forever, and eventually the bottom will fall out on all this. But let me know what you think about all this in the comment section below. And if you liked the video, make sure you click the like button, share the video, and subscribe to the channel if you want to stay up to date with the latest news. Thank you.